According to recent data, large Bitcoin investors are stocking up on the cryptocurrency, prompting analysts to predict another considerable price increase. Bitcoin whales are those who have a significant amount of Bitcoin. They're also becoming a source of concern for investors. By selling even a part of their assets, they can send values dipping. And now that the cryptocurrency has increased about 12-fold since the beginning of the year, those sales are more likely. Let's get to know what Bitcoin likely has in store for us investors. Welcome to yet another exciting video. Before we begin, don't forget to subscribe to our channel and turn on the post notification so that you never miss out on any of our upcoming exciting content. Disclaimer: do remember this video should be construed as investment advice. This video was created only to share information. Moreover, because we all know the crypto market is quite volatile. Therefore, by the time you watch this video, the values must have shifted to a completely different level than those described in the video. Therefore, before investing, please research and consult with a certified finance expert for the most acceptable financial and investment advice. With that said, let's watch the video and discover more about Bitcoin whales. Bitcoin has always remained a phenomenal player in the crypto industry. It's because Bitcoin has no intrinsic worth, so its recent price spike is difficult to explain. It's a type of digital payment managed by an independent network of computers on the internet that uses encryption to authenticate transactions. It was launched in 2009 with a white paper authored under a pen name Satoshi Nakamoto. Its most passionate supporters claim it has the potential to supplant banks and even traditional money. But it is only worth what someone is willing to trade for it, making it vulnerable to large swings in prices. On November 12th, someone sent about 25,000 bitcoins to an internet exchange worth around $159 million at the time. The story quickly spread over the internet, with Bitcoin dealers debating if the owner was about to sell the digital currency. Thus, Bitcoin embarked on the journey of crypto. On January 8th, Bitcoin hit another high of $41,973. By January 23rd, it had recuperated to $32,170. Coming to present 2021, throughout June, July, and August, the so-called Bitcoin whales crypto wallets have at least $50 million in cryptocurrency in their holding. Soaring high values of Bitcoin. As the price of Bitcoin improves, the most significant investors appear to be increasing their holdings. Bitcoin and cryptocurrency costs have jumped again in August 2021, with the overall crypto market reaching $2 trillion for the first time, with just some minor coins gaining massively. Fresh statistics from blockchain startup Chain Analysis says cryptocurrency accounts holding $50 million or more in Bitcoin have consistently increased their buying since the end of June. Prices rose above $50,000 in late August, confirming the bullish sentiment. According to analysts, around 40% of Bitcoin is held by about 1,000 individuals, each of whom may desire to sell nearly half of their holdings at current rates. Furthermore, the whales can plan their actions ahead of time or show them to a select few. Many of these significant owners have known each other for years and have supported Bitcoin since its inception, and they might potentially join together to either tank or prop up the market. Along with the Securities and Exchange Commission, some may count as currencies depending on how they were organized and how investors hope to profit from them. Experts say, as in any asset class, large individual holders and large institutional holders can and do combine to manipulate price. Because of the young age of these markets and the speculative nature of the assets, such manipulation is extreme in cryptocurrency. On the other hand, ordinary investors lack the clout necessary to persuade a multi-millionaire to heed their call. They can trace addresses with massive holdings online and initiate heated market conversations on exchange boards, but they have no idea what the whale's objectives and motivations are. As discussed by a Bitcoin lawyer, there is no transparency to speak of in this market. Everything that is material in the securities business must be disclosed. It's quite difficult to figure out what's going on in the virtual currency world. In smaller digital currencies and tokens, ordinary investors are at an even larger disadvantage. Bitcoin has the least concentrated ownership among the coins that individuals invest in. The top 100 addresses control 40% of the supply of Ether, a Bitcoin competitor, and elite holders control more than 90% of the supply of coins like Gnosis, Qtum, and Storj. The teams in charge of these initiatives include several significant owners. Legislators in Washington, D.C. and throughout the planet are attempting to discover how to make cryptographic money more secure for financial backers and less interesting to programmers by ordering guidelines and rules. This 2021, China re-energized its undertakings to fight progressed financial structures, generally through crypto mining laws, while U.S. senators are pondering a new institution to invigorate Bitcoin charge declaring standards. As per Next Advisor, this is since, supposing that the law passes, trades should give 1099-B tax documents with cost premise data to financial backers. This will significantly limit the measure of time needed to record crypto assessment forms. Given market unpredictability, contributing experts encourage keeping digital currency ventures to fewer than 5% of your entire portfolio and never putting away cash you can't bear to lose. The SEC has considered ETF leeway a few times as of late. However, none were at any point supported, in different places like Canada and the EU. Crypto ETFs are not presently accessible in the United States, but more Americans will want to put resources and impact the digital money market. You might add crypto to your portfolio directly from a similar business with which you, as of now, have a retirement or other customary venture account. Putting resources into a crypto ETF conveys a similar danger as some other crypto venture, since it's only an arrangement of resources that is expanded by numerous cryptographic forms of money, which are all speculative and unstable. If you're not ready to lose cash by purchasing crypto on a trade or putting resources into a crypto reserve, you ought to truly consider whether you're willing to have digital currency in your portfolio by any stretch of the imagination. A few investigators accept that in the second half of this current year, bigger overall associations will speed up reception much further. Bitcoin's expense has gone from a zenith of $60,000 in April to a low of under $30,000 in July in 2021. Bitcoin has, as of late, overflowed back toward $50,000. Since 2011, Bitcoin's cost has encountered various hideous patterns followed by pullbacks. Others are more hopeful about Bitcoin's quick ascent. As indicated by Bill Noble, a specialized examiner at Token Metrics, a cryptographic money examination stage, said that the price of Bitcoin will keep on ascending for the rest of the year. Volatility of Bitcoin. Due to Bitcoin's unpredictability, financial backers should adhere to a drawn-out methodology. Try not to stress over transient changes in case you're purchasing for a long-haul development potential. Passionate responses can compel financial backers to act imprudently and make decisions that result in misfortunes on their experience. That's the reason why, for a long-haul significant quantity buildup, you ought to just contribute what you're willing to lose and adhere to more conventional resources. As indicated by experts, the quantity of addresses holding more than 1,000 Bitcoin has arrived at another unequaled high of 2,334. And it is noticed that solitary exchanges by such whales can cause huge swings in Bitcoin's cost, overwhelming any fluctuations by more modest financial backers. CoinDesk separated data from crypto exchange OKEx last year in 2020 to compose a possible explanation for why whales had the choice of computerized cash regards as they rose. Accordingly, a large portion of retail monetary supporters have been scrambling to discover the show, as shown by the report. Also, according to a report in The Telegraph, David Gerard, creator of Attack of the 50-Foot blockchain and a notable crypto doubter, the key part may effortlessly influence the cost. Since the Bitcoin exchanging market is very thin, any of them may wreck it. He's expressed there isn't a ton of accessible volume to exchange and that there is a great deal of exchanging shenanigans that don't occur in controlled business sectors. Upcoming forecast for Bitcoin. Janet Yellen, Biden's Treasury Secretary, has recommended that legislators control cryptographic forms of money like Bitcoin, referring to fears that they are, for the most part, utilized for criminal purposes. The Biden government could be favorable to crypto because of the arrangement of crypto master Gary Gensler as SEC administrator. Whales can control cash costs, and given Bitcoin's new unpredictability, they are going under expanded investigation. As indicated by industry figures, generally 13% of all Bitcoin, or around $80 billion, is held in a little more than 100 individual records, as per The Telegraph. It proceeded to say that just shy of 2,500 known records, out of a sum of almost 100 million, hold the top 40% of all Bitcoin. We highly recommend taking all required steps and investing in the cryptocurrency with extreme caution and knowledge. Do you want to invest in Bitcoin? If you found this video inspiring and wish to see more content, please share it, like it, and subscribe to the channel. Let us know which crypto analysts inspired you the most below in the comments section.